So this session is talking about with this topic. Now we have entered the phase 4 of MCO. Are we close to a market rebound? So I'll be doing the first session of the sharing, then I'll pass it to Jupan. And of course, if you guys have any question, please feel free to put in the comment. We will be taking it after the presentation. Okay, let's start. So this is just a presentation, a little bit of disclaimer before we start the session. All this sharing is basically some of the information that we get from the news and so on, and we are compiling this and doing some sharing on our thoughts, but it's not an advice on buy or sell call. So what is actually happening? I don't think I will go into it. Where is it? The bear market, or the weird thing that's happened is, even though all the data around the world is showing very bad economics signal, but it seems like the market started to rebound, and you can see it from the slide that we're going to share next. So first is the Dow Jones Index. Ever since the early of April, they have started the rebound after all these COVID uncertainties. I think it have rebound about 20 to 30%. Of course, the same thing happened in KLCI. The thing that we recorded, the screenshot is about 1,380, but I think today we can even hit 1,004. So
yeah, we did.
Good. And lastly, the Straits Times Index of the Singapore market also seems to be very bullish. So during this kind of events, some of the feel that will come out from everyone, including me, myself, is the very famous term that I want to share today is the FOMO. So it's a fear of missing out. So this is as simple as every human nature, that you typically will have curiosity, or you wanted to get something if everyone is doing the same thing surrounding you. So for example, you can see Facebook lately just rolled out a care emoji. I think this sort of steers the feeling of missing out, where a lot of people ask, hey, how to get this? Then they started to post in forum, post in comment, and try to ask how to get this. Everyone of my friend also able to post it, but I cannot. So I even have a friend that decided to delete the Facebook application and reinstall it to get it. So this is a classic example of everyone tend to behave. But if we practice this kind of behavior when you are doing trading or doing investing, it's very, very dangerous, because ultimately you are investing into a company that you wanted to be a part of it. You are the owner of it. But if you do the buy and sell decision purely based on surrounding factor or the fear of missing out, most of the time it might not turn into a good result. That's why we wanted to share with you. Now it seems like things like the thing that's happening right now is like the FOMO situation, where people are trying to do something because it seems like a momentum is coming from behind you to push you forward. Then, oh, I cannot miss out, I must buy. Everyone say bear market is the best time to invest. I have missed the round, now it seems to be going up. I should buy now, else I will miss out. So all these things is very dangerous. And then before I go into the next slide, if you guys are having the care emoji, if it's possible, then you can leave the emotion into the post, because me personally, I didn't get it. Don't know why. So I also
didn't get it.
Okay. So this is some of the things that we observed throughout last week. This is very famous, where the WTI index is actually dropped beyond zero. Although this is only the result of the April result, but then the May one also seeing about the same thing. So it's not really doing well. And then you can see some of the news saying there are a lot of ship actually packed with oil that no one wanted to take it. So because the production of oil is too many, so they need to find somewhere to store it, and they cannot store it in the land, so they go and explore the other place where is the sea. And also some of the news from Straits Times saying Singapore might see the worst recession in recent memory of the year. Then we if you take a look on Bloomberg sharing, you can see they are giving very contradictory kind of projection. So the first one is telling you recession is coming, but the second one saying there might be possibility of having some drug they're able to cure the COVID-19 virus. Then the future actually rise after all this news. So it's very contradicting. And then, of course, Malaysia also have some news saying the markets start to go downwards. And then, what is the reality here? One thing we wanted to share today is the stock market is always forward-looking. It's like a signal to what the economy going to perform. And what the stock market react actually can give you a signal whether this thing is doing well or not doing well. So what is the insight that we gain from finding out as in when we study from the stock market? I will pass it to Jupan to continue the session.
Okay, sure. Thank you very much, Chun Beng. So I think the actual scenario that we're looking here is that a lot of the stock market of the world, they are very confident of a V-shaped recovery, that once COVID-19 is over, it's a history, then everything can just go back to normal, just like that in a snap of a finger. And so that is pretty much why the market has rallied so much from the bottom, and also very neglecting the current situations that we are in. So in a way, if we want to put it into perspective, it's like having a child, and you bring your child to a fun fair or to a park. Your child will always run in front of you, and your child will always be the first one to reach the swing, and then you'll be the one running after your child. So you can see your child is happily on the swing, is a very bright and happy situation, but you are still trying to play catch up. So this is the current situation we are in. The economic downturn is a real thing. I think you've seen plenty of news also, and partially for Malaysia also, why has the market been pretty much bullish is Bursa Malaysia actually suspended the IDSS, the intraday short selling scheme, back in March. So you will see that out of 900 companies plus listed in the Bursa Malaysia, around 280 plus companies are actually having this IDSS scheme. So more than a quarter of companies are being put on prevention to be short sell, and that is why the market has no room to actually go down further and could only go up. Okay, also talking about Bursa Malaysia, even though that they have suspended their IDSS around in the middle of March or end March, you can see that they have just posted their latest quarterly results, which is spectacular. You see that securities trading revenue actually went up by 32%, and the derivatives trading revenue jumped 63.5%. So I think during the MCO time, a lot of people are actually investing in share markets or playing trading during their time at home also, when it is office hours. So that particularly contributed to Bursa Malaysia's spectacular quarterly result. I mean, quarter on quarter, they are up by close to 20%, which is very, very impressive, given that a lot of companies are starting to report results that are partially or really, really impacted by the COVID-19 closure. So just like we mentioned just now, supposedly the stock market and the economic situation should be hand in hand. If your country's GDP is performing, is expanding, and the stock market also reflects it. But as of currently, this is a very unique situation where we see that the stock market just rallied far beyond the current economic situation. Of course, people are pretty much bullish that the cure for COVID-19 would be very effective, and we could actually restart the whole economic situation much faster than than predicted. But I think that you have to really understand how the economy really works. It's not just like switching on your PlayStation or switching on your laptop, which just requires 5 minutes, because the whole entire system on how money flows actually is a long and tedious process. So our thoughts is, unemployment is one of the big words thrown at us every time we look at the news today. Not only just Malaysia, I think countries around the US, Singapore, our neighbor, is also very heavily using these words when it comes to the effects, the downturn of COVID-19, because most countries around the world have been going shut down ever since middle of March, and I think Malaysia is already 6 weeks in MCO. Singapore outside here, we are around 1 month, going to be 1 month. And during this tough situation, companies will definitely be impacted. Your employers will be impacted. And to control the so-called cost, salaries paid out, I think plenty of our audiences have also been impacted by the MCO or the business closure. If you're impacted, you can let us know. You can say that I'm impacted. Let us know in the comments whether your business or your work is impacted by COVID-19 or not. And are you really unemployed just because due to the current COVID-19 situation where your employers have to really let you go? So in US, it's particularly scary. I think currently the latest numbers that they are giving us, 26 million of US citizens are unemployed. To give you a comparison, the whole Malaysia population is 30 million. So you can say that roughly the whole Malaysia worth of population in the US is unemployed. So it's a very, very serious matter. I think Malaysia, the economic department also gave a forecast that up to 13% of Malaysians could be finding themselves out of job just because the closure of COVID-19. And of course, Singapore, they are already saying it's a recession already. So our thoughts on the current situation is, the economic is a big moving machine. You just see the whole country, how it operates like a big moving machine. And it's just like your car. So if your car during MCO, you never go and restart it, and when MCO ends, you go and restart it, you see your car can restart or not. And the same theory or the same rationale applies to a country's business. So you cannot just say, okay, COVID-19 is over and everyone goes to work as per normal. Things don't just work in a snap like that, because we are talking about how things work in a country, how money flows from the bank to the companies and then to workers as salaries. It's not just like switching on our computer that easy. So I think the aftermath of COVID-19 is very serious unemployment, and most of us will be impacted. So what is our advice? I think, of course, people on the hindsight, we are seeing that the market has been going up. There will be a tendency to actually go after the market because now it's still not back to the previous high, and you will be very, very tempted to actually chase after the market. But our words of caution is always have some safety cash buffer, some safety cash for your 6 months to even 1 year survival requirements, money that you need to hold on to for paying bills, for buying food, groceries, or even your installments. Always have that cash ready. Then only you continue to look at opportunities at the market, because of course the market has really rallied, but it doesn't mean that there is no more opportunity, and you shouldn't be afraid that even that if you have missed the bottom, and you should like straight away disperse all your cash into the market right now and hoping that the market will go back up, because we will never know again what will happen. Back then when we had our first live, we talked about a little bit about how the economy works and how COVID-19 will actually impact us. That was in early March. And that time, I also previously briefly mentioned that we never know when the cure will come out. And sure enough, just 1 month later, there have been news saying that cure is coming out and it's very promising. And we will never know that somewhere down the road, 5 days later or 1 week later, they say that the cure is not successful. And then you see the market tanking down again. So you always have to be very careful and cautious. Don't let the news mislead you to make decisions that may end up you may regret somewhere down the road. So you still have to ensure you have enough cash on hand to survive. Then only put a bit of the extra into the cash market, into the stock market to find your next potential good investment. So I think that's about it. Pretty quick sharing on the we shouldn't be FOMO during the MCO Phase 4 where markets have already gone up close to 30%.
Yep, I think there are a couple of questions coming in. We'll just put it up. Maybe Jupan, you want to take the first one?
Okay, let's see.
So basically,
can you elaborate? Okay, Mervin, this one also I did a bit of study. Basically, there are roughly around 900 plus companies listed in the Bursa Malaysia, and only Bursa Malaysia gives permission to actually around 280, close to 300 companies for intraday short selling. It means that if you don't have the share, you can sell the share first, maybe in the morning, and when afternoon or evening before the market close, you have to buy that share. So if you sell it at a high side and it comes down, and then you buy it back, so you will also profit from the so-called price difference. So at first, I was also skeptical whether IDSS actually helps to stabilize the market. Once I went through the list of companies inside the IDSS list that Bursa Malaysia actually allows for short selling, they are big companies. You have your Maybank there, CMB there, practically all the blue chips are there. So you cannot short sell your blue chip. And you cannot short sell a blue chip, they can only go up. And these blue chips, a lot of them, they are constituents of the KLCI index. So if your index cannot go down, can only go up, then it will go up. So it somehow acts as a cushion to prevent the market from dropping to drastically lower levels. So I hope I answered the first question on how IDSS somehow really does help to support KLCI. So I think we move on to the second question. Any reason why the stock market in the US is bouncing back despite the unemployment? I think it's because that a lot of people are very confident of a V-shaped recovery. Basically, the market came down, and then now that there's a cure, they are very certain that it will just straight go back up to the previous high. So that is why you see why the market has rallied so drastically, even though that we know that we are in a tough situation right now, and a lot of people are losing their jobs, and this hasn't been factored into the stock market prices. So no worries. I think you have missed out the part where we might have described it how the market actually overreacted for the past few days. But you can probably rewatch it when we put it up as a normal video. So Oichi is asking why IC Titan and Sapura Energy doesn't hit by the report book. I think also these two companies are inside the intraday short selling scheme. Basically, people cannot short sell the company, and I think LC Titan and Sapura Energies are two special companies that we also plan to talk a bit about today. So you see, these two companies are actually in the oil and gas business, and the oil and gas business, as you all know, have the upstream, midstream, and downstream. So Sapura is somewhere in the upstream part where they are in charge of the drilling of the crude oil. And LC Titan actually gets the oil and then they fraction it into oleofins. That means chemicals that are derived from petrol. So usually topstream benefit from high crude prices, and the low stream are the ones who are impacted. And if the crude prices are cheap, then the upstream will be the one giving lousy results, and the downstream companies are the ones giving good results. But you see that now is a very special scenario. Both companies are not doing well. Sapura Energy has been, the result has been terrible. And I think you look at the cash on hand that they have, it's also very less, and it's also scaringly less. We don't know whether they have any idea or any tricks up sleeves to actually raise cash, because they just raised cash from the public last year. And after these results, you see that a lot of things get impaired, and a lot of their cash has been used up. and business is not actually bringing in the revenue to them. So it's a very tough situation to be in for Sakura. Better keep in mind if you have this company in your portfolio. And LC Titan also has been impacted because of low demand. During the COVID-19, demand for chemicals has been low, and hence practically why the reason that both oil and gas companies from upstream and downstream are not doing really well.
Okay, I think
Okay.
So far we only have these few questions. If you guys have any other question, can continue to put it in. If not, I hope we are doing some both way kind of conversation. I think both of us wanted to learn from you all as well, if you all have something to share. But then
yeah.
While waiting for the question, I think maybe we can talk a little bit about the recent update of Facebook that we find it quite interesting. Not only Facebook, but Google also did quite a bit of update. Both of them are doing the update with the same purpose. If you are a tech news follower, you will see Google Meet now is actually free. The style that they do is exactly like Zoom. Facebook going to launch a thing called Messenger Room, also same thing like Zoom. So why I brought out this thing is because this market has been the only thing that remains and perform during this COVID-19 issue is one of the companies should be Zoom. I think that the thing has been spiked up, even though they got data leakage issue or whatever not, it is still very, very strong. But the thing that we wanted to share here is all these things is a direct targets that most of the people will go after them. Same concept like what we shared just now is the fear of missing out. Wow, everyone is using Zoom. Then now I should invest in Zoom as well, for example. But when you wanted to do decision like this, you should always take a step back and think, if this thing, everyone start to use it, whether it will attract any huge competition from the other big players or not. Because big player is always capable enough because they have cash and all those things to do the same thing and then use their ecosystem or their group of followers or user to kick you out. So Zoom, I think now the peak has gone unless they do some pivots and then they roll out more things. Else slowly Facebook and Google definitely will take up the space. Video conferencing has been, you'll be very competitive. Everyone will be in play. Zoom, if you bought the share, maybe you're too late to sell. In short term, they're not going to hit that high anymore. This is what I feel.
Yeah, let's see. Let's check a bit. How much is Zoom right now? I think Zoom share price came down quite a bit. Yeah, I think they did. It came down from $180 per share. Now it's around 146. So I think they got really heavily impacted when Facebook rolled out Messenger, improved version of Messenger, and Google Meet actually also entered the market by doing the same thing of what Zoom is currently doing. They copied basically the functions and then tell us, oh, okay, we can do it for free. Why you still need Zoom Premium? And that's pretty why market really reacted to Zoom's downfall. So Marine is asking to share some stocks on my watch list. Juming, you have any share on your watch list that you think for long-term wise, you're looking at them and you are planning to buy if the price is right, and these companies are worth the long term?
Okay, I don't know whether here got Malays or not. The one that has been following for very long is Carlsberg, but then I think I missed the bear of it, and then now I'm putting it in my watch list and hope when the price is right, then definitely I won't hesitate anymore. I will straight away buy it. And then the next is one is also in my watch list is it's actually a REIT, but not the typical REIT like the shopping malls those, but it's a REIT that manages hospitals. It's called cut REITs. I think this is the one that will be very, very stable because they can survive COVID. And then, of course, in the future, healthcare will be getting more and more important. So these two will be in watches. How about you?
So for me, practically I invest in the Malaysia, Singapore, and also US markets. So I would say Malaysia-wise, I'm keeping a close look on the banks. So I think Malaysia banks have been pretty much low, even before COVID-19. I think share price of banks has been coming down. Like Maybank, I think if you look back at the share price, they came down from 12 ringgit per share until 9, 8, and now it's 7 plus. So it has been on the downtrend. But if you look at the business itself, it's still doing pretty well. Practically, I think why the share price came down that much was geopolitical reasons. I think Malaysia political scene has been very dramatic, very like a drama. And of course, if you are a foreign investor and you see Malaysia politics, you generally be spooked and you want to lower your geopolitical risk. That's why you tend to cut your exposure in Malaysia banks. But all in all, if you are Malaysian and if you do follow the Malaysia banks performances, the big ones, you would see that most of them are still performing. Of course, moratorium will take a hit on their earnings and their cash flow issues, but the big ones will definitely survive. And of course, you also have a few small upcoming banks which are also having a lot of potentials as well. So banks will be definitely on my watch list. Of course, FMCG, as you mentioned just now, Carlsberg is also one of it. I already have Heineken Malaysia in my portfolio. So coming to Singapore is a bit hard, but I think Singapore, I will be looking at the few REITs lah, because Singapore has close to 40 plus REITs listed. So we have a lot of choices here on what REITs to actually buy, and no tax compared to Malaysia. We have a withholding tax of 10% over here. There's no tax, so everything goes to my bank account if I am a REIT shareholder. So that's about it. We see we have a few questions. Mervin is saying REITs next few quarters might post poorer results. Not so good prospects yet. What do you think? True. I think if you look at IGB REIT's latest results, they already factored in some part of the so-called missed results or underperformances caused by the mall closures during the MCO. So practically, I think their latest results covered Jan to March, and MCO happened in middle March. So there's a 2 weeks period where all malls are closed. Only the essential businesses inside the malls are operating. So I think only Aeon is operating inside there, and a few like clinics and other essential businesses. So the revenue definitely went down a lot. You might say, yes, in a few quarters, it might post poorer, but bear in mind, MCO of Malaysia is relaxed already. You can probably assume if things go right, maybe in the month of June, everything will slowly become back to normal, and even the non-essential business will start to operate back. And once they operate back, the rentals get paid to the REITs. So in the end, you would see just a few months of missed performances. But if everything goes well, prices might go back. I think as of currently, today's price, they went up to 170 plus per share already from bottom of 150. Yeah. Most waiving rental for some outlets during MCO. Occupancy may drop in the next few months. If the business really goes bankrupt and they stop leasing from the malls, yes, occupancy might drop a bit. But I think if you are talking about REITs that shopping mall REITs that are in prime location like Sunway REIT, Sunway Pyramid, IGB REIT, the Gardens Mall, and also Mid Valley, their occupancy is very stable. I think it's close to 95% above. They never went down below 95%. Of course, 1 quarter, 2 quarters, yes, probably. But I think once you have occupancy space, plenty of businesses who see there's a space to rent, they will quickly notify these key malls, and then sooner or later you see that the space will be taken already. So it's not like every time you walk past these big malls and you see that there are plenty of space left to be leased out lah. So I think that's about it. Yeah, occupancy is just temporary. I think in the long run, occupancy will be back to close to 100%. How do you evaluate REIT? Okay, basically, for me, I evaluate REIT in two ways, two methods. I will see how efficient they are to ensure that their occupancy is close to 100% for retail REITs, and then how they also expand. So for REITs like Sunway REIT, if you follow their so-called purchase and acquisition portfolio, they have been growing their property list every year quite stably. So you see that once they have more and more properties, all these properties under their portfolio also contribute more and more rental to the REIT. And I think one very good thing about Sunway REIT is that they haven't really raised any cash from the REIT holders. They don't ask you for cash and say that I need to buy more properties. Everything is from their internal retained earnings, and they manage to actually just enlarge their property portfolios. So, okay, I have a friend here, Dylan is saying, thank you very much. Of course, do continue supporting us. It's not always we come on live, but we're slowly making it a habit. So, of course, it's a two-way sharing. We wanted to share more with you, and also hope that you can also share a bit information with us. So it's a two-way kind of thing. Next, I think Mervin has another question on FMCG stocks also. Any FMCG stocks you have in mind? Kawan, CCK, LHI, and Brahim's. I think I've studied Kawan Food. Basically, they are in the business of making frozen pastries, frozen flour-based food, your roti canai and your flour-based food. Company has low gearing, very less borrowings. Everything is, even though they have a new plant now in Pulau Indah, is from their own pocket. They basically earn more money through their businesses, and then once they have enough money, they just bought a new plant and then they expanded. They never ask for money from the shareholders, and I think the plant is very big. I think the last time I studied it, they still have close to around 30% of capacity, vacant capacity that they can go forward. So the current plant they have in Pulau Indah can sustain a growth of 30% more of what they are currently doing. So of course, then again, their product category is also competitive. There are a lot of other players who are in the roti business and the frozen flour-based food product business. So you won't see them like suddenly giving 20-30% contribution growth, but you will see that they are steadily climbing up there. So it depends on the management to see whether they have a game plan to actually grow that fast also. Whereas for CCK, LHI, and Brahim, I think the company is not doing that well. I didn't really went in there. CCK and LHI are mainly in the poultry business. Also very commoditized because a lot of players are in the poultry business also. QL also is in the egg and the poultry business also. So it's very competitive, and they have to really outwin the competitors to really grab the market share. So these are the so-called commoditized FMCGs that I won't really look into because it's too commodity-like, and it's not branded. It's not like Nestle, where everyone just wants to buy Milo and not the other substitutes of cocoa drinks out there. Okay, next we move on. Karen is saying that 2020 Great Lockdown will be worse than 1997 and 2008 financial crisis. How do you see the global market post MCO lockdown? This is a very tough question. If I were to rewind back during the first time we did the live around March, I was really quite pessimistic with the market because at that time I already know that the scary thing is not COVID-19. The scary thing is what life would be after COVID-19. And as I just said in the slides, I don't believe that the economy will just snap like that and then everything back to normal. If you can also ask yourself this question: do you think that the country's economy, the global economy, will just go back to normal in just one day? You can, if you agree that the market will actually go back to normal in one day, you can type a one, reply me in the comment section a one. If you think that it's more than that, it's not as easy as that. You can give me a two. That means you require a longer time, 3 months, 6 months, or even 9 months for the economic situation to go back to normal. If you think it's that long time of period, then you give me a two in the comment section. So I think we are now almost the end for Malaysia at the COVID war. The next thing we should focus on is how the country would actually look like when everything goes back to normal. It won't be normal. I think a lot of people are losing their job already. More would come. And that would be a very scary situation to be in. How severe will it be, like 1997 or 2008? Not too sure, but it won't be nice. It will be pretty ugly. So yeah, so just make sure you have enough cash, and just that you, touch wood, anything happens to us, you don't have to force sell your investments lah. Next, which sites do you use to see financial results and research? If I want a quick glance through, I would go to Malaysia Stock Biz. Basically, from there, I can just get all the latest updated quarterly reports. And that would be my first place to go to. Then moving forward, if I want to study closer, I would really just read the reports lah. Basically, I will go through all the reports of the company that I want to screen through. Then only I can also do my analysis and come up with articles to share to you all. So practically, that's how I actually rely on the websites or the annual reports to get my information. Thanks. Next. Yeah, you see plenty of people are already giving their opinion. They think that you require more than a day, more than a month, 3 to 4 quarters. So that's roughly 9 months to 1 year time horizon for the economic situation to actually go back to normal. So bear in mind also, banks are tight. They are supporting us by giving us moratorium. The cash that they have on hand will not be so easily dispersed out for companies to grow, to borrow money for capex or for whatever reasons, or additional hiring. Even most companies has stopped or freeze their hiring as well. So when people don't go to work, people don't have a job, they won't be able to take up loan to buy houses, buy cars, and that will not drive the economy. Very simple and straightforward logic, in my personal opinion. Some industries will be resilient. Yes, I do agree. Some industries are resilient. I think one of the very easiest examples would be the healthcare. Hospitals don't need MITI application to continue running at 100%. Your gloves company, Hatta Lega, Top Glove, Kosan, even a small one like Caring. These companies, they are really not impacted by COVID-19 pandemic. And it's a cash cow business. You can see that most of the growth companies, the top ones, they are actually raking in money, cash into their operations. And then once they have enough cash, they just build another plant. And this is how Top Glove, Hatta Lega, Kosan has been expanding non-stop. Because Malaysia is the global producer and supplier for gloves. We supply the world's 60% of the world's consumption of gloves. Next, Alex Yim, should we stay invested now? Yes, we should. Very much, pretty much simple, because you never know when the market will just go up, like now. So it can also, 1 week down the road, it can also go up back to the previous high. So if you don't stay invested now, you will be crying when the market actually goes up. So you hold on to the companies that you think in the long run will not be impacted by COVID or other pandemics or other financial crises as well. So these companies would actually slowly increase their earnings and also slowly grow. So definitely you should stay invested if the companies you are holding are good companies. Shin is asking any segments to look into if I am into venturing the US market. Okay, personally, after starting to invest in Malaysia and also slowly in Singapore, then I also slowly look into US companies. US companies are really, really fantastic because if you look at the US companies, most of them, their business model or business reach is global. Companies like McDonald's is listed in the US, but they have operations all around the world. That means there will be people in Malaysia eating McDonald's and then they'll be earning money. There'll be people in Indonesia eating McDonald's and McDonald's Corp in US will be earning money. Same goes for McDonald's in Philippines, South Africa, China. Everyone will be eating McDonald's and this money will eventually go back to McDonald's Corp in US. And these companies will earn their money by a lot. So that's just one example. McDonald's. You also have KFC. It's also under Yum Brands. It's also listed in US. You have Starbucks. And even the software that we use, Facebook, is listed in the US and everyone around the world is using Facebook. Google, also everyone is using Google to find information. We cannot live without Google Maps. And this is how these companies actually are so fantastic. They don't just focus on business in their country, they focus doing business around the world. And you should look for companies that have a global reach because when you look at the US market, these are the kinds of companies that you are looking at, and you have to pick the best of the best if you want to take advantage of investing in the US markets. Rachel Wei. Oh yeah, regarding research materials, I also do look at Morningstar and Reuters. Basically, I get my news from The Age. I also get my news from Bloomberg.
Jupan, I think your mic got some problem. It's not clear.
Okay. Okay, I think now it's clear.
Yeah.
So yeah, Morningstar is one of the websites also I look at, and Newswise, CNBC, and Bloomberg. So next I have Taryn asking another question. Dow Jones have rebounded 6,000 points from COVID-19 sell-off just within a month. How do you see the global share market going forward? It will be uncertain. We wouldn't know when the market will normalize back to the current economic situation we are at. I think only when we are at the current scenario where every COVID-19 is the history, and now we are looking at, oh shit, is this how the economy is going to be start on the current condition? Then only the market might normalize down, or it could be a really V-shaped recovery. Everything goes back to normal just in a snap of a finger. We also have to have some preparation for that. That could be a possibility, even though chances are not that high. But I still think that is a possibility, and that is why you should stay invested just to take advantage if the economy does give a miracle and then rebound at a V shape.
Yep, I think I have something to add on. We can always learn from history. That's why we always compare to 1997, 2008, the market crash. And then it seems like most of the time it will behave the same, which I think is true to a certain extent. The only thing that we need to take note is the market crash now versus previous. The only thing that really difference is the flow of information. We are at the age that internet is everything. News or tips or whatever not flow very fast. That's why you can see it dropped so much, suddenly it bounced back. So in Mandarin, a lot of people say, 我怀疑人生 I don't know what is going on. Suddenly just rebound just like that. So it's nothing wrong because the flow of information is just too fast. People react very fast. And then it actually causes a lot of uncertainty. This is why also a lot of people start to monitor the index called VIX to see what is the fear or the uncertainty that the sentiment is having. So what is the takeaway from this is, yes, it will always go up and down, but then if you see it from a long term, then maybe from whatever Jupan that has shared, we can see in the next 2 to 3 quarters, it might not be recovering soon. But then it will be some sort of news or whatnot that push the thing up or push the thing down. So you just need to get prepared. Once it hit the price that reaches your fundamental, as in you do some fundamental research and you think this is the price is right, just enter. And if you think the price is somehow at the high side, just sell. Because this is an opportunity that we get at the current era. Things move very fast, very uncertain, up and down. So it depends on your investing style. If you're short term, of course, you can take advantage of all these short term investment. But then if you're long term, just keep an eye on it. When the price is right, just collect bit by bit.
Yep, exactly.
I think maybe we take this last question, then we will end the session, Japan.
Okay, I think we have one last question here. Pingan is asking, he says he's new and don't have any stock yet. So FOMO, please don't be FOMO. It's a very bad habit. But still stay put. Any advice, please? I think, okay, put it this way. If you're a newbie, even at this junction, right, chances are you're going to miss the opportunity, even though good companies are dropping in front of you at a cheaper price. But the thing is, I don't think it's fair to really point you at the direction and just say buy this company, because that would be very irresponsible. I think this happened unluckily. You are a newbie, and then suddenly it's a stock market crash and you are thinking to take advantage of it. I would say that you should continue to brush up and learn on what investing is about, and study. And then once you actually know the company, what the company is doing, and you are certain that this company can grow for a long period of time, and it's cheap, and you're willing to buy the company, then only you enter the market. So don't just because most companies are cheap and then you just simply whack or whatsoever, and under the FOMO feeling. If you still want to invest, I would say that you can take advantage by investing in an index. So in the long term, index will actually go up. Index fund is actually a collection of all the blue chip companies under one basket. So basically, if you buy an index fund, you are buying a collection of, if you're from Malaysia, you're buying Maybank, CIMB, all the big companies in a basket. And of course, it will still go up and down, but in a long term, 5 years, 10 years, the thing will still go up, and you will be some sort taking advantage of the current bear market to invest for your future 5 to 10 years down the road. And if you really want to invest into an individual specific company, you still have to put in your time and effort. And if the economy really takes 3 to 4 quarters time to recover, you still have time. You still have 9 months to 12 months time to pick up some basics in investing. Because at the end of the day, you don't need to become like a fund manager kind of knowledge or skills to start investing. Once you really start to know the basic, then you can try out a little bit by little bit. Then that is actually also a learning process also, where you start to invest your first company and handle your subsequent purchase as a so-called retail investor.
Okay, I think we'll be doing some wrap up. We're a bit sad because this care emoji is released, but then we didn't receive any care emoji. We didn't receive any care in our.
Yeah, I didn't get it also.
So if you guys like our session and think wanted us to continue doing it on a weekly basis, please maybe leave a comment and then give some like to this post. So we are motivated to do something every Thursday. We are targeting to do it every Thursday night, same time. We will be compiling news of the weeks, insight of the weeks, and then of course followed by the Ask Me Anything session.
Yep.
And then, of course, if you like it, recently me and Jupan has been shamelessly trying to learn our video skill. We have been taking a few videos, opening up a YouTube channel. Please help to subscribe. We have pinned the comment. Help to subscribe. Help us to break 100 by this today or by this week.
No, by middle of May maybe.
Okay, I think that's all from me. Jupan, have any last thing to share?
No, I think that's about it. I think continue to stay at home, stay safe, and it's for Malaysia. It's already at the end of the MCO. Things are starting to get relaxed, and
It
just
depends. It depends.
uh, I mean, of course, we want to hope for the best also lah. So of course, I also want to see Malaysia, um, pretty much back to normal first. Then we can start to pick up the pieces that probably got broken when the COVID-19 actually struck the whole entire world lah. So fingers crossed, hope for the best, stay safe, and we'll see you soon.
Yep. Bye.
Bye bye.